Good day Forex trader. Your USD Forex signal, Euro heads to a 20-year low. The Euro/USD pair will likely have a bearish breakout and drop to the 20-year low of 1.0280. Bearish view. Sell the Euro/USD and set a take profit at 1.0280. Add a stop loss at 1.0500. Timeline, 1 to 3 days. Bullish view. Set a buy stop at 1.0440 and a take profit at 1.0515. Add a stop loss at 1.0345. The Euro/USD made a major bearish breakout last week as investors focused on the weakening of the European economy and the overall bullish US dollar. The pair slumped to a low of 1.0350, which was the lowest level since 2017. A slight decline below this level will push the pair to the lowest level since 2002. European economy under strain. The European economy has been under serious strain in the past few months because of the situation in Ukraine. The situation worsened last week after Ukraine decided to shut a pipeline that transports natural gas from Russia to Europe. It then came under pressure after Russia decided to sanction a number of European natural gas companies that receive gas from the country. As a result, the bloc's gas prices surged and put important industries at risk. At the same time, the bloc is struggling from an increased shortage of wheat and other industrial metals like steel and aluminum. Therefore, analysts expect that the bloc's inflation will keep rising in the coming months. This week, Eurostat will publish a number of important economic numbers that will have an impact on the Euro/USD pair. On Wednesday, the agency will release the latest consumer inflation data. Analysts expect these numbers to reveal that the bloc's consumer price index rose to 7.5% in April. If they are correct, it will be the highest since records started. The other key numbers will come on Tuesday, when the agency will release the preliminary GDP and employment change numbers. Economists believe that the economy expanded by 5% in the quarter. Christine Lagarde will also deliver a speech, a week after she signaled that the bank will hike interest rates. The other key data that will have an impact on the Euro/USD pair will be the American retail sales numbers that will come on Tuesday. Euro/USD forecast. The Euro/USD pair made a strong bearish breakout last week. At the time, the pair managed to move below the important support at 1.0505, which was the lower side of the horizontal channel. It remains below the 25-day and 50-day moving averages. Now, it has formed a bearish flag pattern while the relative strength index, RSI, has moved above the oversold level. Therefore, the pair will likely have a bearish breakout and drop to the 20-year low of 1.0280. GBP USD Forex signal, higher low at $1.2226. GBP/USD, bull seeking to break above $1.2277. Today's GBP USD signals. Risk 0.75%. Trades must be taken before 5 p.m. London time only. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.2226 or $1.2139. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 25 pips in profit. Take off 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to run. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.2277 or $1.2406. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 25 pips in profit. Take off 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. GBP/USD analysis. I wrote in my last piece on April 28 that we were seeing extremely strong bearish momentum into new 18-month lows, which is usually very foolish to bet against on the long side. However, I also noted we were getting support at the big round number of $1.2500 at the same time as we saw support in the EUR/USD at $1.0500. I thought that this confluence may be a technical barrier against further US dollar gains, at least over the short term. I was really looking to enter a short trade from a bearish reversal at $1.2624. This was an okay call as the main direction of the day was downwards, but even after breaking below $1.2500, which I saw as pivotal, the price made a strong bullish rebound later to invalidate my analysis. The price here fell strongly last week to new long-term lows, before making a bullish rebound at the end of the week. Despite the long-term bearish trend and the price still not far off that long-term low, we are seeing an important bullish sign, a first higher low at $1.2226. I think the best approach today will be to stand aside and wait for the price to get established below $1.2226, bearish sign, or above $1.2277, bullish sign. It is quite possible that the price will basically hold within this range until the end of today's London session. AUD/USD Forex signal, retest of resistance at 0.7036 likely. The AUD/USD pair tilted upwards on Monday morning as investors continue focusing on the upcoming Australian election and important economic events. Bullish view. Buy the AUD/USD pair and set a take profit at 0.7036. Add a stop loss at 0.6850. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.6895 and a take profit at 0.6800. Add a stop loss at 0.700. The AUD/USD pair tilted upwards on Monday morning as investors continue focusing on the upcoming Australian election and important economic events. It is trading at 0.6940, which is a few points above last week's low of 0.6832. Australia election ahead. The biggest catalyst for the AUD/USD pair is the upcoming Australian election in which Scott Morrison is dueling with Anthony Albanese. The election will happen in the coming weekend and analysts believe that the outcome will be relatively close. The most recent polls have Albanese leading, although the situation could change this week. The pair also tilted upwards after data from China showed the impact of the current lockdowns to the economy. According to the National Bureau of Statistics, NBS, the country's retail sales and industrial production were a bit weak in April. This happened as Beijing announced a series of lockdowns in key cities. The next key item to watch will be the upcoming minutes by the Reserve Bank of Australia, RBA, that will come out on Tuesday morning. These minutes will provide a clear picture about the deliberations that the bank's officials had when they decided to hike interest rates by 0.25%. It was its first rate increase in about 11 years. Analysts will be looking at more signs about the next few meetings. Additionally, the AUD/USD will react to the upcoming jobs numbers from Australia. The data, which will come out on Thursday, are expected to show that the country's unemployment rate continued falling as the economic recovery continued. On the other hand, from the United States, investors will be focusing on the upcoming retail sales numbers that are scheduled for Tuesday. As in March, expectations are that sales declined slightly because of the rising prices. The other important data will be U.S. building permits, housing starts, and existing home sales. AUD/USD forecast. On the 4H chart, the AUD/USD pair formed a small hammer pattern on Thursday last week. In price action analysis, this pattern is usually a bullish sign. The pair has moved slightly above the middle line of the Bollinger Bands while the Relative Strength Index, RSI, continued rising. Therefore, while the overall trend is bearish, there is a high possibility that it will keep rising as bulls target the key resistance at 0.7165. This was a notable level since it was the lowest point on May 2nd.